ARM Holdings, the AI revolution's secret weapon and a must-own stock. Imagine owning a crucial piece of AI's future. A company whose technology powers everything from your smartphone to the most advanced AI data centers on the planet. That's ARM Holdings, ARM, the unsung hero of the AI revolution. While Nvidia steals the headlines, ARM is making quiet but massive moves that could make long-term investors very, very rich. Hi. In today's video, we're diving deep into why ARM Holdings is a stock every long-term investor should watch. Welcome to the Finance Savvy, where we break down the biggest trends in tech and investing. If you enjoy insights like this, smash that like button, subscribe, and hit the notification bell so you never miss an update. Let's dive in. Why ARM Holdings is an AI powerhouse. Since its IPO in September 2023, ARM Holdings has skyrocketed, tripling in value and proving the skeptics wrong. And while its stock isn't cheap, trading at a high price-to-sales ratio of 47, its long-term growth potential is undeniable. Let's break down 3 reasons why ARM isn't just another AI stock. It's a must-own for long-term investors. 1. ARM is at the center of the AI arms race, literally. ARM isn't just riding the AI wave, it's at the core of it. Its power-efficient CPU architecture is now embedded across the entire AI ecosystem, from edge computing to AI supercomputers. But here's where it gets exciting. ARM is part of Stargate, a $100 billion AI infrastructure initiative backed by Nvidia, Microsoft, Oracle, and OpenAI. And guess who's bankrolling this ambitious project? SoftBank, the majority owner of ARM. That's a golden ticket for ARM. It's directly connected to the companies leading the AI revolution, and its technology is set to become even more indispensable. But it doesn't stop there. ARM is also deeply involved in Crystal Intelligence, a Japanese AI initiative focused on autonomous AI agents, AI that can operate independently without human input. As AI models become larger and more complex, power efficiency becomes critical, making ARM's technology even more essential. And let's not forget, OpenAI, the company behind ChatGPT, is already using ARM-based technology. 2. ARM's technology is dominating both the data center and edge AI. AI doesn't just live in data centers. It's making its way into everyday devices, from smartphones and laptops to autonomous cars and IoT devices. And that's where ARM thrives. In the data center, ARM-based CPUs, like Nvidia's Grace chips, are already inside AI supercomputers. Amazon, Microsoft, and Google are all using ARM-designed chips in their cloud services. AWS Graviton, Microsoft Cobalt, and Google Axion. In just 2 years, ARM's share of the cloud computing market has jumped from 9% to 15%. At the edge AI is the next frontier, and ARM dominates here. From Apple Intelligence on iPhones to AI-powered cars, smart appliances, and robotics, ARM's energy-efficient architecture makes on-device AI possible. Why? Because AI on battery-powered devices needs chips that don't drain power like a black hole. And that's where ARM is unbeatable. 3. ARM's royalty model is a long-term money machine. Here's where ARM's business model truly shines. Unlike Nvidia, which sells physical chips, ARM licenses its designs and collects royalties on every device sold that uses its architecture. And here's the kicker. Half of ARM's royalty revenue today comes from designs that were launched over a decade ago. This means ARM's AI boom won't be a short-term spike like Nvidia's recent surges. It will be a steady, compounding revenue stream for years to come. Royalty lag equals bigger future payoff. When ARM signs a licensing deal, it takes 2 to 3 years before it starts collecting royalties. That means ARM is just getting started when it comes to monetizing AI. New architectures, higher royalties. New AI-focused chip designs like ARM's V9 architecture and compute subsystems, CSS, command higher royalty rates, meaning future earnings will be even bigger than what we see today. Bottom line, while Nvidia is making AI chips today, ARM is building the foundation for AI chips that will dominate the next decade. The bigger picture, ARM and Nvidia's AI takeover. Now, you might be wondering, if ARM is so powerful, why is Nvidia still dominating the AI conversation? The truth is, both companies are essential to the AI revolution, but in different ways. Nvidia's deep learning GPUs are powering AI training, but ARM CPUs are making AI more accessible, scalable, and power efficient. And despite DeepSeek's AI breakthrough shaking up the market, Nvidia is still on track to become the first company to hit a $4 trillion market cap. Imagine this, a future where Nvidia and ARM work even more closely together, with Nvidia's AI chips and ARM's power-efficient CPUs dominating the entire AI supply chain. That's not just a possibility, it's already happening. Final thoughts. Is ARM Holdings a buy? So, is ARM Holdings a stock worth owning for the long term? Absolutely. With AI booming, cloud computing expanding, and edge AI becoming the next battleground, ARM is positioned at the heart of it all. A. It's embedded in AI's biggest projects, including Stargate and Crystal Intelligence. B. It's growing fast in both the cloud and consumer AI markets. C. Its royalty model is a long-term cash machine. And while its stock is pricey today, long-term investors could see massive returns as AI continues to take over the world. Wrapping up, the Finance Savvy's take. That's it for today's deep dive into ARM Holdings and its role in the AI revolution. But before you go, what do you think? Will ARM be one of the biggest winners of the AI boom? Or is its stock too expensive right now? Let me know in the comments. Again, thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to the Finance Savvy for more insights. Hit that notification bell so you never miss an update on the biggest trends in AI, investing, and tech. Got questions? Feel free to reach out. I'd be happy to help. See you in a few seconds. Stay savvy. Nvidia's $4 trillion milestone. Why DeepSeek's disruption won't stop the AI king. For the past 2 years, Nvidia has been unstoppable. A company that turned a once niche business into the most crucial player in the AI revolution. But then, DeepSeek happened. A Chinese AI startup came out of nowhere, claiming to have built a model as powerful as ChatGPT, but at a fraction of the cost. The market panicked, Nvidia's stock tumbled by $600 billion, and suddenly, everyone started questioning if Nvidia's reign was over. But here's the real question. Is this the end of Nvidia's AI dominance? Or is this just another bump on the road toward a historic $4 trillion valuation? Spoiler alert, DeepSeek might actually be a tailwind for Nvidia, not a threat. Hi, in today's video, we're diving into why Nvidia is still on track to be the first AI stock to hit a $4 trillion valuation, despite the DeepSeek panic. Welcome to the Finance Savvy, where we break down the biggest trends in tech and investing. If you enjoy insights like this, smash that like button, subscribe, and hit the notification bell so you never miss an update. Let's dive in. Connecting the dots, ARM Holdings and Nvidia, the AI powerhouses. In our last video, we discussed how ARM Holdings is the secret weapon behind AI's future. ARM's power-efficient CPU architecture is embedded across AI's entire ecosystem, from smartphones to AI supercomputers. But here's where things get even more interesting. Nvidia and ARM aren't competitors, they're complementary forces. Nvidia's AI-focused GPUs dominate the data center, while ARM's power-efficient chips are taking over the edge AI market. Together, they form the backbone of the AI revolution. And now, both companies face a common challenge: the emergence of DeepSeek and its R1 AI model, which claims to be just as powerful as OpenAI's ChatGPT, but built with cheaper hardware. So, how big of a threat is DeepSeek? And more importantly, why do I believe Nvidia is still set to become the first $4 trillion stock? Let's break it down. What is DeepSeek and why is Wall Street freaking out? On paper, DeepSeek's claim is huge. If AI models can be trained on cheaper, less powerful hardware, does that mean Nvidia's AI chips are no longer needed? Well, not so fast. Yes, DeepSeek's R1 model is impressive, It supposedly delivers ChatGPT-level performance while using hardware that costs way less than Nvidia's cutting-edge GPUs. That's what sparked panic selling, wiping out $600 billion from Nvidia's market cap in just days. But here's where things get interesting. This actually might be great news for Nvidia in the long run. 1. The AI boom isn't slowing down, it's about to accelerate. If DeepSeek's breakthrough is real, it means AI is becoming more cost-efficient. But here's the thing. Lower costs don't mean lower demand. According to Jevons paradox, when technological advancements make something cheaper, demand for that product actually skyrockets. Hey, think about it like this. When computers became cheaper, did people stop buying them? No. More people started using them, and demand exploded. The same thing will happen with AI. B. Cheaper AI models equals more AI adoption, more AI servers and clouds spending, more demand for Nvidia's chips. If anything, DeepSeek could actually expand Nvidia's total addressable market, pushing the company toward even higher earnings in the next decade. 2. AI infrastructure still runs on Nvidia, even for cheaper models. Even if AI models like DeepSeek's become more affordable, the infrastructure to run them is still Nvidia's playground. A. DeepSeek still needs powerful GPUs for large-scale AI training. B. Cloud hyperscalers like AWS, Microsoft Azure, and Google Cloud still rely on Nvidia's technology to build AI models. C. Even OpenAI, DeepSeek's biggest rival, still runs its most advanced models on Nvidia hardware. In other words, DeepSeek isn't replacing Nvidia. It's just adding to the AI demand explosion. 3. Nvidia's lead in AI chips is still unmatched. Let's not forget, DeepSeek is a software company. Nvidia is a hardware company. And when it comes to AI hardware, no one even comes close to Nvidia. A. Nvidia controls 80% of the AI chip market. B. Its next-gen AI chips, Blackwell GPUs, are set to be even more powerful. C. Competitors like AMD and Intel are years behind in AI chip development. And here's the ultimate kicker. Even if DeepSeek's AI models are cheaper, companies will still need Nvidia's chips to train the next generation of AI. That's why I believe DeepSeek isn't Nvidia's downfall. It's just another stepping stone on its way to a $4 trillion valuation. Who stands in Nvidia's way? Right now, only 3 companies are serious contenders for hitting $4 trillion first: Apple, Microsoft, and Nvidia. A. Apple. Its stock is heavily reliant on iPhone sales and Apple Intelligence, but I don't think it will move the needle fast enough for a $4 trillion valuation. B. Microsoft. Azure and AI investments are strong, but the intense competition from AWS and Google Cloud makes it hard to predict steady growth. C. Nvidia. Its AI chips are still essential for every major AI breakthrough, and the AI revolution is just getting started. Between these 3, Nvidia has the clearest path to $4 trillion. Final thoughts. Nvidia's path to $4 trillion is still clear. So, where does Nvidia go from here? As of February 2025, Nvidia stock would need to rise just 38% to hit $4 trillion. That's not out of reach, especially if. First, Nvidia's earnings report, February 26th, shows continued AI demand. Second, the AI boom accelerates, driven by both enterprise and consumer AI. Third, next-gen NVIDIA GPUs, Blackwell, push performance to new heights. And if NVIDIA's stock bounces back to its pre-DeepSeek level, we'd only need a 14% increase to reach that historic $4 trillion milestone. In my eyes, DeepSeek is not a death sentence for NVIDIA. It's a wake-up call for investors. AI is evolving, but NVIDIA remains the undisputed leader. Wrapping up, the Finance Savvy's take. That's it for today's deep dive into why NVIDIA is still on track to be the first AI stock to hit a $4 trillion valuation. But before you go, what do you think? Will NVIDIA reach $4 trillion first? Or is there another contender? Let me know in the comments. Again, thanks for watching. If you found this video helpful, Don't forget to like, share, and subscribe to The Finance Savvy for more insights. Hit that notification bell so you never miss an update on the biggest trends in AI, investing, and tech. Got questions? Feel free to reach out. We'd be happy to help. Until next time, stay savvy.